I think from what I've seen from the community, like they're very excited from a sentiment standpoint about what's being built here. So Raka, are you with us?
Hey, yeah,
We appreciate you taking some time to come on today. You guys seem to have just put out some recent updates. We'll give a little. We'll start at the top for people unfamiliar with OMFG and kind of get some of the lore, some of the history here, and then get up to the updates that you guys are just pushing as we speak. So, thanks for coming on, Raka. You want to give us a little background on yourself and how you came to founding OmniPair?
yeah, sure. And thanks for having me, guys. I know it's a bit late, maybe, but we actually hands down focused on the launch, and we're gonna get actually to talk more about this. So a little bit of like context about me. Um, I'm, uh, um, I'm, I've been in crypto since 2017. I first started in Ethereum, obviously, and actually this is the first project that I built on Solana, and I get a lot of questions about why choose Solana. And yeah, if you're interested, I can also answer this. But yeah, I'm a self-taught dev. I studied science, biology, but I've been coding since I was young, and yeah, just I love like CS, economics, and cryptography. Recently, when I joined Ethereum, so OmniPair is an AMM, just like Uniswap V2 AMM, that is capable of lending its liquidity to borrowers. So it's both of like an AMM and the lending protocol at the same time, and it does not require any like oracles or like human operator to adjust risk in the protocol. So it actually works autonomously, just like an AMM, right? Um, and yeah, I think that's it.
Yeah. Well, okay. So maybe let's just talk about why you did choose Solana. That was something you said you came from Ethereum, you chose Solana.
Yeah, yeah. So first, actually, when I started, I didn't want to choose an L2. I don't really believe in L2s. I think this is just like something
Seems
that's
like
temporary.
Vitalik
And
doesn't.
yeah, I mean,
He's jump
yeah,
ship.
like man, like I've been there since Plasma, if you guys remember this,
Mhm.
and like the initial idea was actually scaling layer one, and down along the road, L2s came up, and I think just Vitalik got pushed into, like believing that layer two will make it. And right now this is changing because, like, I mean, layer one actually proved to scale, right? And now you end up with layer twos, like a lot of them, just like fragmented liquidity all over in capital,
Terrible.
yeah, and even fragmented IB, right? So like if let's say I wanted to deploy OmniPair on Arbitrum or Optimism, right? I will just be exposed to Optimism users and capital, and it's just actually like insane. So it didn't make sense, and Ethereum, of course, made sense, but also I wanted to do leverage, which maybe will would require cheaper gas. Basically, that's one thing, but also Solana stand out because it is one of the most it is actually very good at at democratizing like tokenization. So like what happened was Bump Fund, internet capital markets, and it's one of the chain that actually, I mean, it's one of the top chain at creating new long tail assets every day, basically, right? Meme coins, and so on and so forth. So yeah, so that actually seemed like a good bit, and I was just like considering it, and I mean, just like by coincidence, I discovered MetaDAO, right, and Profit, and it was insane because that was actually, I think, the same week they launched the Launchpad, um, or
Do you
maybe like
remember when that was? I mean, we really started covering MetaDAO around the Vici raise, but do you remember
yeah.
when that
Yeah,
was?
I think that was maybe April last year, or
April. Okay.
yeah, April, maybe slightly before. And yeah, that's when I reached out to Profit, and I just had like I just created an account. I didn't have any follower, right? And like he responded. They were actually looking for competent like founders, and I just like discussed OmniPair and why I wanted to do a sale, because also I didn't have the required
Mm.
funds to to bootstrap this, because like I'm building a lending protocol, right? I need audits. It's not that easy to to deploy it unaudited. And actually, that's one thing we really think about a lot is risk, because we are really, I think we are actually innovating in that particular aspect of lending, which is managing risk autonomously without human operators, like or human facilitated operators. Yeah, that when I discovered MetaDAO and they were actually building future keys, which I already knew for some time, and it was like, oh, this is actually being built on Solana. That really actually changed how I look initially at Solana, because I had like different, impression about it before. So yeah, this is how it started. We did the raise, obviously, and we just launched 1 week ago. Yeah.
Yeah, we'll get into some of the numbers and how launch went and everything. I want to go back real quick to the fragmentation problem we talked about. There's so many L2s, even fragmentation across just tokens these days with Pump Fund and the emergence of so many tokens being launched per day. Like, is solving the fragmentation issue part of the mission that you guys have? I remember we saw some people try to do it back in the day on Ethereum specifically. I think FOMO is doing, a lot kind of for solving the fragmentation issue by offering Base, Solana, and I think BNB as well, with like USDC is the native pair that everything's traded in. Are you guys thinking about closing the gap between fragmentation, or are you guys fully focused Solana here? Just curious on your thoughts.
Do you mean fragmentation on like the chain layer, right?
Yeah.
Not DeFi. I think it's out of our scope, at least for the moment. To be honest, I think we don't have any ambition on that specific problem. But we actually care a lot about fragmentation within DeFi, and that's what we're actually solving. So yeah, we do we solve fragmentation, but yeah, on the app layer or like on DeFi layer. To be specific, and let me actually start by telling how OMNIPAIR started, and just some thoughts about it, because I think also we when I first started, I had some ideas in mind, and I had like a specific view on DeFi, and I think that's actually being changed, and it got changed by working on OMNIPAIR. So first, where did the idea came from? So I have been passionate about permissionless lending for a lot of time, because I've been passionate about DeFi in general, but specifically lending, because I had an incident, or like a situation that I've gone through, which I was working for this amazing project. I had team tokens vested, and at the time I had a cliff, and when the cliff ended, I got my tokens, right? And at the time I just had like a financial hardship, and I really didn't want to sell the tokens, because at the time it was like, historically it was at its low, and I was seeing like all the amazing work we're doing each day, and I was like really bullish about the token. I didn't want to sell it. I figured out that, like, why not borrow some USDCs against it, like how I do was like how exactly I do was like Ether or like ETH, right?
Right.
And it was not listed anywhere, right? It was a decent project, well-known project, everyone knows it, but it wasn't listed anywhere. And I'm pretty sure it's not like an Oracle issue. It's a risk issue, actually, right? The market cap was not that big to be listed in lending protocols. And at the time I discovered the project, it's called Ajna. I don't know if you know it or not, guys, but it was a little bit known in Ethereum at a specific time, but it is one of the good permissionless blending protocols, but it actually failed to reach BMF. And me, myself, I couldn't use it. I just didn't understand how to use it. I didn't understand the risks as a borrower, because like it literally changed. It was not like Avi, like Compound, like any other lending protocol. It just like changed it, impaired the borrower and lender experience a ton. And it was very hard to actually understand, let alone use, right? So it just failed. But they did it, right? They actually did it, but no one used it.
And this is allowing for people to borrow or lend
using
pretty much any asset.
Yeah, exactly, permissionlessly. But you couldn't find any liquidity in there. As a borrower, you just didn't find liquidity, right? Because lenders didn't use it. And the reason, I can talk a lot about it, but the reason I think it's actually made lending an active management. And it made it actively managed. So I mean, lending usually is just passive, right? You as a lender deposit into some vault, or in the case of like Avi, I mean, isolated pools or cross margin, but you just like lend your assets and leave it. You don't manage it, right? It's like Uniswap V2 LBing, except that it's one-sided deposit, not two-sided deposit, right? And you just get passive. But in Ajna, you needed to actually manage it, because the price were basically chosen by lenders. So you as a lender need to be in range. It was actually very similar to how concentrated liquidity market makers work. So yeah, it was just like very different. Even the borrower experience was like very bad. So yeah, I just thought about this, right? Like, and I tried some stuff as well, and I understood that this is actually a very hard problem in DeFi. And regarding the demand for it, if you guys went to our documentation, we have a problem page that basically go through like the problem in liquid numbers mostly. So actually, the demand for borrowing using any asset is huge, because like, I mean, this is applied to, I would say, like in Solana, it's like 70% of the volumes on AMMs, even more than this, comes, under 1 billion market. It's like 95% of the volume, but I think it's like 70% for assets under 100 million market cap. So that's basically the majority of tokens, right, are not integrated into lending, and you cannot short it, you cannot long it, right? You cannot do anything with it aside from just trading it in the spot market, like in AMMs, right? So I just had the insight of like, we need to do permissionless lending, but we actually need to keep the same experience people are used to. I mean, we should keep lending passive, and we should keep borrowing exactly the same as any other lending protocol, obviously. And this is basically the insight, and this is how it started, right? And to be honest, just the AMM idea, it was like, I was chatting with a friend. He's also a builder, and we were just like laughing, like, why not just lend some liquidity out of an AMM, right? And it started there, and it's like, it was fascinating, because like the more I researched it, and I just like was fascinated that no one even tried to do so, right? It was crazy, because I will tell you why. If you guys look back at how AMMs and lending like originated and developed in DeFi, they basically started at two very separate things. You have like AMM started with Banker, like Uniswap, just for solving the like to creating a spot market or like an on-chain exchange without relying on, off-chain market makers, right? So to do it autonomously, and they did it by the constant product formula. And for lending, it started with like ETHLend, Compound, which was just unlocking lending for borrowers. And I think the innovation in Compound was just like the on-chain interest accrual and the C token design. And since then, like each one of those just like kept evolving in its own separate path and never intersected. And no one actually, saw AMMs and lending protocols intersecting at any time, right? But I will tell you like what is the problems for each one. So AMMs, and still right now, faces a huge problem in capital efficiency. Basically, most of the liquidity that sits in an AMM don't get utilized. The volumes that don't cover 100% of the liquidity. It just covers like, I don't know. There's a project called Amalgam, and they are actually, I think, trying to build something like what we are building. And they did a great analysis about like liquidity, utilization in AMMs. And I think just like the numbers were, 70% to 90%, depending on the on the pool itself, because sometimes you got like stable pairs or like long tail assets. So like it's different from market or like a pool to another. But yeah, it's like 90% to 70% of liquidity just sits there and don't earn anything and just don't get utilized, right? So that's one cool thing.
Is that because it doesn't hit the price bins for that liquidity, and so there's no fee to be earned?
I mean, that's actually I think it's more complicated than this. It's really because I think it's actually very fundamental that the volumes does not actually rely on 100% of the underlying liquidity. So like if we talk about like V2 pools, you have actually a lot of problems, right? Because of how you fragment the prices on the infinite like price line of prices, but also for concentrated liquidity, it doesn't make it better. Maybe actually it's slightly better, but I think yeah, I just don't like the fact that in concentrated liquidity, MMs you need, like, I mean, LBs needs to actively manage the liquidity. And also I think it's just BVB, because like what if all the all liquidity providers just choose the same tick, or like it becomes basically exactly as V2 pool, right? It doesn't.
And so just so I understand the problem you're solving here is you're saying that, hey, look, you might not earn fees on your locked liquidity in an AMM, but we're also going to add this other ability for it to be lent out on top of it, also providing liquidity as well. So it's
Exactly.
kind of like a dual usage for the liquidity itself. So if
Exactly.
I'm an LP, I put 100 grand in, I'm earning fees on trading activity, but I'm also potentially earning fees on someone like Dom saying, oh, I need to, loan $5,000 for, and, I guess Dom is staking his tokens on the other side as collateral.
Yeah, exactly. That's pretty much it. So it's just like, for like from an AMM perspective, it just makes the AMM more capital efficient, because now you use, the typical 20 to 30% of the liquidity for the swaps, maybe even a lot less, a lot more less. But on the other side, like the majority of liquidity, maybe for some markets, will be lent out. And you as an LB, you get swap fees. And on top of it, you get also the interest, right? The lending interest.
Yeah.
Which actually solves, like, I mean, in my opinion, it solves like the AMM issue, right? And if you take a look at the other side, like the lending protocols issue, I think the biggest one is you have a lot of issues, not gonna lie, but I mean, and a lot of room for optimization. But let's just talk about the critical one, which is blending protocols being permissioned. And this actually in too many ways. One, it's permission because it uses Oracle, like external oracles, right? So like if you have some asset that doesn't have an Oracle, usually it will not list it. But also, it's permission because it relies on humans managing the risk. I mean, it's like basically an AMM versus like Binance, like CEX, right? So it's basically like lending protocol got some risk group that decide based on some risk parameters, right? They decide what asset to list and how many cap to assign.
But this is
to
really
it.
important to security, because if I can basically say, my asset is worth something by spoofing an Oracle price or something, I could drain, the lender's money basically.
Yeah.
So maybe explain how you do this in a secure way. I'm really curious about your security here, how you not securitize, but how you secure these loans.
Yeah, that's actually a very good question. Because it's not as easy as just allowing anyone to list any asset in a lending protocol and just like expect it to work. And we have actually some good experiments, I mean, that tried to do it, and it failed, right? So we know that that doesn't work straight up. So the approach of OMNIPAIR is risk should be actually managed autonomously, as well as the exchange itself. And what we ended up doing is adding dynamic LTV, or dynamic collateral factor, which basically uses the same XYK invariant that the exchange use. And let me explain this in a little bit. So when a borrower wants to borrow some assets from the AMM, usually in lending protocols, you just have like a fixed LTV pool wide, right? I mean, some human operator decided for that specific asset, and the lower it is, like the more usually the more risky is the asset, right? And you want more collateral to cover the debt. So in OMNIPAIR, we actually don't we don't rely. We don't do it. The LTV itself gets decided for each borrower.
And that's loan to value, right?
Yeah, exactly. That's loan to value.
Yeah.
So let's
So
say
what is the you don't have an LTV like threshold?
we actually have it, but the thing
Okay.
is it's not global per pool. It's actually assigned. You get it assigned when you try to borrow from the AMM. So let's say you
Okay.
try to borrow 10% of the liquidity in the AMM. The AMM will actually decide an LTV for you, and this will be fixed after you borrow. So it's more of like, it's exactly the same as price impact in a swap. So like now you want to borrow, you get a specific LTV based on your loan size relative to the liquidity itself and the market condition
Right.
as well, right? And I mean, this actually we have been running for 1 week, and even before that, we have been like in 4 months on mainnet actually, but with an audited, non-audited, deployment, and it's been working great. I mean, this is actually proven to work, which actually fascinates me as well, right? And it's more complicated than this. I mean, the technical aspects of it, but just like in general, for the price, we don't use the spot, obviously. We just use EMA, which is just like a better TWAP, right? And for the LTV, we use dynamic LTV. We use dynamic LTV that gets based on how much are you going to borrow, what is the existing debt in the pool, right? Usually when the pool is very utilized, and you get to borrow more, usually the LTV will be lower and more conservative. And this actually takes into consideration price impact of your liquidation as a borrower, because we don't rely on any external markets. And I will tell you like an example for this. So for other lending protocols, when you want to liquidate someone, usually you require the liquidator to bring liquidity from outside the system and repay some of like the debt to get the collateral, right? But for OMNIPAIR, actually, we don't do that. We do write-offs. So when you want to liquidate someone, we are liquidating him inside the AMM itself. I mean, so we just basically get the borrower collateral, the amount to be liquidated, and dump it in the AMM, and just like remove the debt. And it will, like, if you think about this, it looks like actually a swap, right? So it's very interesting how like swaps and lending intersects in this aspect.
So all right, I want to break this down into simple terms because it can get deep DeFi mechanisms.
Little
here.
daunting.
So the LTV, what ratio are you doing those loans? Is it 50%? So let's say Dom has MCG token, which doesn't exist, everyone. So Dom has MCG token. Let's say he has $100 of it. He puts it into OMNIPAIR. Is he borrowing $50 out, or is he borrowing $20 out? What's his loan to value ratio?
Assume the market cap's 100 mil.
Yeah. Okay. Don't worry about the market cap, just the value of the tokens he puts in. Let's not complicate it any further. At what point is his position turned into that swap, as you would say, or is like rights to it are relinquished and the tokens then are taken? Like, I'm just trying to see how you reconcile that process.
Yeah, sure. So first you need to determine like the collateral value the user is adding. So first, what is the price of MCG?
$1.
$1.
Okay, let's assume it's $1, and you are depositing how much tokens? You are depositing
He's depositing 100 tokens at $1.
Okay, so this is valued at $100, right? Yeah. So basically, LTV is very simple. It's also called collateral factor. Is like if you got a 50% LTV, that means you can borrow 50 USDC, for example, on your 100 MCG if it's valued at $1. So let's say now, instead of wanting to borrow using 100 token, you want to borrow using 100K tokens, right? So what you would expect is it will not be 50% LTV. It would probably be like 40% or maybe 30% LTV. So the more your loan size get bigger relative to the pool, and we actually calculate the risk and assign you an LTV that basically take risk into consideration for LPs, right? And when we do liquidations, is basically when you, let's say that your MCG price sadly went down to, 90 cents, right? So now if you borrowed the full amount, the $50, your collateral value will be less, right? And now you'll be liquidatable. So, and how we do it is we don't obviously liquidate the full position. We just liquidate amount of your debt just for you to get back to, like the healthy threshold again. So let's say we're gonna liquidate $5 or $6 from your position, which brings you back to, let's say, 90 MCG instead of 100 MCG.
And you're not liquidating, you're just putting it in you're basically, it's already in the pool. You're just like removing his ownership and transferring it to the pool.
Exactly. You're just transferring the locked up collateral back into the pool. So this is actually, I used to make fun about this, but this is like, you can describe it as like delayed swap, optional delayed swap. It's basically when you borrow, if you get liquidated, you execute a swap in the future, basically.
Right. And so how do you like get the USDC back? Like, how do you get USDC back? If he's taking 50 USDC out, are you then taking that MCG tokens, which don't exist, and you're then going to an AMM somewhere like a Meteora pool, or if it's trading on Radium, which it would be obviously traded on Meteora. But if you, and then are you selling it in that pool?
No. We actually, it all originates and happen in an OMNIPAIR AMM. So if you want to take a loan against your MCG, you head to an MCG USDC pool, and you just add the MCG to the pool, and then you can unlock or like borrow the other pair token, which is USDC in that case. So it's isolated. Each pool offers basically two types of collaterals and two types of the token. So you can add MCG, borrow USDC, or you can add USDC as collateral and borrow MCG. And when you actually do this, like if you add MCG and borrow USDC, now you're longing MCG basically, especially if you leverage it, like you looped it multiple times. And if you do the opposite, you're basically shorting MCG. So when MCG, because now you borrowed MCG, right? So if MCG, value went down, you make more profit because now your debt is worth less, and when you pay it, you unlock. You need to pay less to unlock your collateral, basically.
I want to really get the framing here from you as someone who's thinking about DeFi, in a very meaningful way. And I even think back to like, you have Revolut, you have the emergence of these neobanks, and like there's just so much advantage to having some of the opportunities that DeFi enables that Web 2 and traditional finance hasn't really enabled yet. How are you thinking of DeFi in terms of the future? What will the future look like when this kind of becomes more normalized? Is it going to like redefine how the banking industry works? Just really want to hear your like grand vision.
Yeah, I think when that's actually a good question, because like when I first started, I didn't really think about this in this broader, image. I just focused on permissionless lending, right? And to be honest, when I was working on OMNIPAIR, the more I think about it, I kind of have this opinion right now that DeFi is actually not really decentralized. I mean, it's decentralized, of course, but it's not permissionless. Because actually, in DeFi, you just have access to permissionless spot exchange, right? And nothing else, right? If you guys like check, the top lending protocols in any chain, you will be amazed about how many collaterals are supported relative to the available tokens or assets in the market, right? In let's say in an AMM or like a spot exchange. So actually, what we have like DeFi now is really the way I look at it is actually it's very primitive, in opposed to what we actually think of, to be honest. Lending is actually a very important financial building block, because like it is fundamental, because this is how have access to margin, to leverage, can hedge using leveraging. So this is really the finance, or this is really finance. You need lending to have finance, in my opinion, of course, right? If it's just like If it's just like spot, it's just trading, right? Spot trading, and that's it. And I think OmniPair is going to change this. And to be honest, like, yeah, I'm just so excited to see how this unfolds and how it's going to work. But yeah, I think in the future you will be able to leverage and short sell any token, even with maybe conservative or low LTV, but it unlocks something that's I mean, up to date. It's not unlocked anywhere. So I think it's very important. And regarding your question specifically, like like the way I imagine it is like if you integrate OmniPair as an infrastructure with other, new banks or whatever the protocol that you can build on top of it. I mean, you can have a lot of use cases. Let's say, for example, sometimes I think just like I have tokens, right? I have like OMFG tokens, and let's say I don't have access to like stables, right? And I just want to pay, I don't know, like my bill or want to purchase something, and I just don't I don't want to sell, right? And like it will be as easy as like using this new bank or card and just like add my token as collateral, borrow some USDCs, pay, and then figure it out later and repay my loan and give my tokens back. Right. So I mean, this is like really empowering, and I'm excited to see it in action, especially for Solana. You get like all the launch pads, all the long tail assets. For the first time, you can now short it, right? If you want it. Or long it.
No, right, absolutely. I want to kind of pivot here because I think we've got a much better understanding history. We've covered a lot of that stuff. You guys just launched your app, right? And I actually have this tweet pulled up here. You can see OmniPair beta is now live on Solana at omnipair.fi. How has that been? How has the interest been? What feedback are you seeing?
TVL metrics.
Yeah.
Yeah, of course. So yeah, we just launched 1 week ago. It's audited. But we have like around 250k TVL right now, and around like 50k volume for that week. OMFG USDC pool got 100% APY, and this is actually just the swaps APY. It doesn't even involve the interest yet. We'll add it in the coming days. So I think it went fine. For me, actually, I don't care about TVL for the first week or two, because we are really thinking about risk here. We don't want to push TVL aggressively during these times. Yes, we are audited. We have some security metrics in place, but still we think about risk a lot, and it's not battle tested yet, of course. And anyone using it, it's still in public beta. It's not like I mean, used with caution. It's still new, right? So yeah, we are just like bringing partnerships for liquidity cautiously, doing it slowly, trying to monitor how it works. Up till now, actually, we got like around 15 liquidations, because a lot of people used OMFG as a collateral and borrowed, and and yeah, the price of OMFG went a little low in the past days. So some people got liquidated, including me. And I mean, and liquidation worked. We didn't get any bad debt. I mean, it worked just as designed. So it's actually great to see it working in action. And I think just like, the coming days, we will just focus on monitoring it, maybe adding more TVL just slowly and see how it goes. And we, aside of also shipping stuff for security and also for like quality of life features. But the next priority is actually leveraging and bringing leveraging in the UI, because right now we can leverage manually, but it's just like, it's painful. So we're gonna do it automatically. So you just like, you expect the perps like experience in the app, basically.
And how do you sorry, we'll get to this Crypto Jones question in a second, but do you get like, does your pools get discovered by like aggregators and does swaps get routed through it and stuff like that?
Yeah, actually not yet. The 50k
Not
volume, we did it. Yeah, we did it just like arbitrage actually.
Okay.
Helped us, which is not the best thing, but I think we are right now actually in talks with like aggregators, and I think this is a priority for us to integrate into aggregators, because that's when
hit Crypto Jones question next. Yeah, that was good. Okay.
Crypto Jones says it sounds similar to Aave. Ave, do you use your health bar? Do you use a health bar rate, or how do you manage margin calls?
Yeah, there is. Yeah, of course, there is a health factor. But actually, it's not similar to Avi, because Avi is cross margin. I mean, you can add multiple collaterals and use it for the same portfolio, right? As assets to borrow any liabilities or borrow any debt in any token. We are actually isolated pools, so you need to manage each position in one collateral and for one the token. And I think this. I mean, the risk. I mean, Avi is like more efficient in that sense, but also it's more risky for lenders, because now, I mean, and obviously for us, we couldn't just make cross margin, because like now you're gonna have, like, as a lender, you're gonna be lending your money to like pools that tokens that you have never seen before, and people just get it right now. So it's isolated pools. It's not very similar to Avi, actually.
If I was a DeFi user and I have, a few different options out there, maybe like Aave or, Camino or some of the
Camino.
other protocols, whatever you want to, there's so many. If you could give like a one-line elevator pitch on what sets you guys apart that you think would resonate with the average person, what would that be?
Yeah, two messages actually. For borrowers is expect to find collaterals that are not present anywhere else outside of OmniPair. That's it. You will find your shit token, you will find your meme coin, you will find your very respected token in there listed as a collateral. You will not find it in Avi or Camino. They can't do it. And for LB is, I mean, you can use the same liquidity you have on like Meteora or like any AMM like Orca Radium, and gets basically more yield on it. There is actually more risks, because now you got faced with defaulting risk that comes with lending. But I mean, yeah, your capital becomes more efficient, and you make more yield on it.
Can you
And
click
actually,
into that?
Sorry, and I just want to say it's actually passive, so you don't need to actively manage it. You just add collateral and you get the yield.
Josh, you were gonna say something?
Go ahead. This is actually more around my next question, is the fees. But
yeah. So Jake, who's in the chat right now, has made this post. He goes, current leverage protocols are killing users with absurd fees, like 0.46% daily. Imagine in a sideways market. With OmniPair, I think I'm slowly starting to understand it. 1% borrow rate per year, permissionless leverage on any token, no oracles, unified pools for swapping / lending / margin. Example, 1,000 USDC position costs $1.67 in fees over 60 days versus 600 on competitors. You know who you are. Now I was thinking, if / when leverage drops and staking pools incentivize hit, double interest accrual on-chain liquidity for the trenches might genuinely go insane. I'm finally starting to see the vision. And damn, OMFG. Do you want to talk a bit about the fees and how you guys are standing out in this aspect?
Great ticker, by the way. It works.
Yeah, it stands for OmniPair Future Key Governance Token, just for your information. So
I understand why you needed to consolidate that one a little bit. OmniPair Future Key Governance Tokens, quite a mouthful.
Yeah. I just want to say something very quick about this exact tweet. I think the 1% borrow rate per year isn't actually isn't quite right. You shouldn't be paying 1% borrow rate per year on borrowing using Meta or OMFG. We actually changed it we did like a recent change to the default interest rate controller that bumps it up, because we have a slightly different interest rate controller. It's not a curve, so it is actually market driven. It does not, it does not encode like specific utilization point and interest point as some other lending protocols do. Because for us, for some tokens, you may be expected to pay, I don't know, like 500% a year to borrow using this specific token, right? So I think just to start, probably it would be more around maybe 20%. And that's actually very good, because we will offer collaterals that will not be listed anywhere. So you expect the borrower price sensitivity to be very low. I mean, they will be willing to pay more to be able to use that specific token as a collateral, right? So I just want to say this. And regarding fees, it's actually very interesting. The protocol charges two kind of fees, of course. One on the swap fees, which is 10% right now, and I think the same on interest, accrued interest, and this goes right to OMNIPAIR Treasury, OMNIPAIR DApp Treasury. There is no fees that goes to the team or something like this, and all of this is configurable, so anyone can actually create a proposal to change it. And actually, the fees itself, the swap fees, is market driven. So the deployer of the pool can basically set this. And I will tell you something very interesting that I was just thinking about. OMNIPAIR can actually create or have zero swap fees pools, which is like very interesting, because like LBs will still make it through the interest, right? And I think for other AMMs, you don't have this, this ability to charge zero swap fees on swaps, right? Because also impairment loss. I mean, this is actually swap fees is a very important topic on its own, because it's related to impairment loss, and this is something that we are thinking about right now. And this brings us to like what we are working on right now and what we are dropping next. So we are just focusing on shipping leveraging, and what comes after is actually trying to tackle the impairment loss issue. And because now we unlocked blending, which is a good primitive for hedging risk. So we are searching for a native solution for LBs to be able to hedge like impairment loss, which is like, this will be like, a killer thing, because impairment loss is like a very nasty issue that actually, I mean, makes any LB very, very scared of, right? And this should be actually, right? And can eat all of the profits, all of the yield, or whatever. So yeah.
Crypto Jones has another question. He goes, not a fixed borrowing rate. Doesn't that make the short positions unmanageable?
Yeah, I think we just don't do fixed borrowing rate, because this actually brings us back to what you said before. It's just what makes a borrower pays back their debt is interest rate is one thing. It's used for pricing, and it's used for paying back that cost of capital to lenders, but also it's used to shrink back existing debt. So let's say you get a lot of utilization, right? And now you end up of zero cash or like zero liquidity being in the pool. LBs will not be able to withdraw, which is an exit liquidity. It's called, like exit liquidity issue in lending protocols. So also interest works to kind of, incentivize people to repay back their loans and kind of have more liquidity for LBs to exit again. So I know this is not like the best experience, but this is actually not exactly what we're trying to do. I mean, Avi is not fixed rate, and still it's working. A lot of lending protocols is not fixed rate. I mean, yeah, sometimes it's different, but yeah, we are just like, we're not thinking about this right now. So, but yeah, maybe in the future we will think about it. I mean, yeah.
So it seems like you guys have found gaps in the market, and you're building a business to, have solutions around this, make things more manageable for traders and more appealing. The question becomes, what's the go-to-market, right? If you truly have a better solution and you have a product that edges out the competitors, how do you guys take this to the market and get them to participate?
Yeah, I think for borrowers, there is also already like a demand for it. Once we got liquidity, borrowers will come, especially with leveraging. It facilitates it. It drives utilization up. I think the main issue is the liquidity and how we attract liquidity. And I think actually OMNIPAIR does very good job at being a very good pitch for existing LBs, because I think it's very easy to attract capital from other venues and into OMNIPAIR, because the USP is just like, you will have your LP in OMNIPAIR and you will get more yield, and that's actually very compelling to say. So that's actually the go-to-market. We have some ideas and some stuff that we can do, but yeah, right now we're just like preferring to be more slow and just like monitor the situation basically. But yeah, I think it's very easy to market for OMNIPAIR. I think it's not hard to market for OMNIPAIR.
So I have a question for you that's maybe
Sure.
maybe a little bit more, a little bit further out, but have you guys thought about doing some sort of DeFi mechanism for prediction markets? I know there's some longer term prediction markets and there's lots of liquidity there. I can imagine some people would love to earn, trading fees and yield on these prediction markets. Is that something you guys have, thought of, or maybe borrow against a prediction market position, hedge themselves? Like, have you guys discussed this?
Yeah, I think we actually at some point, I actually completely forgot about this. We didn't have, like, we don't have it in our roadmap yet, but we just like had some initial thoughts about it. And I think, yeah, anything that can be tokenized can be actually used to borrow against, and can be leveraged. So yeah, I think we called it tokenized markets. So basically, the whole market can be tokenized into a token and can be used as a collateral. So I think, yeah, I think there is, and I'm not really sure. I've seen some projects that do it. We will not be. I think we will not be the project to actually implement it. But once it's there, it's going to be supported in OMNIPAIR day one, because like we literally support any asset, right? And this is actually a huge opportunity, to be honest. Yeah, that's actually a very good question.
Can we talk business economics a bit too? I'm not sure if you guys have made any projections or anything like that, but I would love to know some of your thoughts about how you're going to drive more revenue to the protocol. And of course, this being an ownership coin, people will see some of the value and upside of that.
Yeah, I think we're still early for this. We do have some numbers, but it's very low to make projections yet. It will be premature to do it. But yeah, I think in the coming weeks we'll be able to drop some projections and kind of have a better idea about it. But mathematically, I guess it will be more revenue than any other AMM, because basically using the same TVL, I mean, assuming the same TVL, you make more yield because you solve the capital efficiency fundamental issue, right? And now you make more yield using same liquidity.
Are you going to AMMs with this proposal at all, and like talking to them about this, educating them? What are they saying about this?
We didn't really talk with AMMs yet, but I think actually, I'm not really sure how to answer this, but yeah, we are just focused on the product right now, the protocol, getting it to work right. And I think, yeah, I think obviously it will change things if it worked the way we imagine it to work. But yeah, I'm excited for the future anyway. it's yeah.
Well, we know the importance of security audits and how people feel comfortable and making people feel comfortable when they have money lended or borrowed on a specific platform. You have a proposal here for the OMFG 002 fund to fund security audits, it seems. Maybe we'll walk through some of these proposals you guys have up at the moment. And can you talk about, are you guys audited at this point? What's the thoughts
Sure.
there?
Yeah, we actually have, we actually did the audits. We did 2 audits. One was Offside Labs, which was like just line by line traditional audit, and we did fuzz testing with Aki's blockchains. And I think we have done a very good audit. we have spent like around 3 months in it. And let me share. It's 1 second. Let me send you our GitHub.
Sure.
Okay. Because we have like the repo is actually the protocol code is open source. Anyone can verify it or see it.
We'll check that out. In the meantime, I see you just pulled that up. Maybe educate people real quick, because Crypto Jones said, what is a token utility, or how does that accrue value? And of course, you are an ownership token that uses Futarki. Maybe just briefly give everyone a quick idea.
I think you already covered that pretty much. I think, I think just like the OMFG token is the governance token. It got ownership right to all of our IP, like code, domain, all of this stuff. It's also used to govern the protocol, right? Setting like the broad configuration for like the revenue, and it's also all the revenue goes back to the treasury, and the DAO is responsible for allocating it however they see fit. So yeah, basically OMFG holders own OMNIPAIR in every and any way.
Thanks for that clarification. Okay, I'm on your GitHub. So where can we see the audit? Right here. Oh, there you go.
Yeah, if you go back to like let me a second. 1 second. It's under audits. Let me actually send the exact one. All right, here you go. And we also got like a security page in the app, so it goes like the audits. And we have right now like a little bug bounty. It's not disclosed yet, but actually it's very important. If someone finds an issue or like a vulnerability, should I mean, we will be welcoming any reports of this kind. You don't have a disclosed bug bounty yet, but we'll be offering one if you got like a report. And on Explorers, you can find our security page and BGB, like BGB key. If someone wants to report like the vulnerability in an encrypted way, they can use this key to encrypt the message and just send it over to security at OMNIPAIR.fi.
Got you. Yeah, I can see this audit here. Man, audits, I feel like, and I don't know specifically what you guys had to pay for this, but I feel like audits are so expensive. They're so time consuming. Like, obviously, then you have to be tedious, meticulous about this kind of stuff. But why is it so? I feel like there's so many people that do audits and you have like so many options, but why is it so expensive, meticulous?
That's actually a very good one, because yeah, I think even that's why this is actually the first reason I raised, because I wasn't able to afford audits, and it's very important. Aside from other things, of course, but yeah, because you basically write code that holds money, right? And it can hold up to billions in some cases. So I mean, you need someone with very good security background to audit it basically for you. And I think the very good report to check is Offside Labs. I think they have done a great job in it. They reviewed all of our like invariants and fundamental assumptions, and they came up with a lot of like economic attacks and that sort of things. And you can see a lot of like the vulnerabilities here and their fixes, but they have done actually a great job. And even giving the initial agreement we did for the money, I think we actually got more more advanced audit regarding what we actually paid. It's insane to say that, but yeah, they actually did a fascinating job in it. And but yeah, saying that's like being audited is not being secure. That's two separate things. We're not battle tested yet. We're still in our early days. So yeah, use with caution. And if you find anything, just get to us. We are actively, we're 24/7 basically active in Discord. So yeah, reach out to us, and we will help. Or if you got any vulnerability that you discovered, if you're like a security researchers, we will work out something.
Yeah, as I think we kind of wrap up, I think we've got a really good idea. Maybe talk about the post-launch quarterly plan that you guys have laid out, and maybe what you guys plan to do next, what's coming.
Yeah, so we obviously spent the first week, like just the past week, working on fixing some of the launch issues. We had a lot of issues in the front end, and a lot of people actually a lot of people actually helped us in figuring out those issues. So we allocated our time to this. I think right now the app is more stable. It's more usable. So but we didn't run into like any major issues. And what is coming next is we have basically there is several tracks. So one of them is like mostly integrations, and specifically in aggregators. This is one of the most things that we need to do, because like this really makes OMNIPAIR pools accessible to the market, right? And it's just like it's very critical for us to have. And we have done a good job in it, but we're still working on the technical side for it, just building the SDK for the aggregators. That's one thing. And for the protocol, we actually have a lot of improvements to do. One of which, obviously, the first one is to ship leveraging in the app. We will not work on the Rust program. We actually have Flash Loan ready for it to be used. So we'll just work on like an auxiliary or peripheral program that just facilitates the looping basically. And we will need to build on the app and backend for it to support real-time BNL tracking and all those features that you expect from like a burp, right? Or a leveraging platform. And yeah, we actually thinking about making mobile app, like a Seeker mobile app, because like this will actually be very good for leveraging. It's not really, I mean, we can't promise it yet, but yeah, we are just thinking about this, and we are just like trying to manage our priorities rightly. So we do the more important things first. But yeah, and after this, it will be probably V2, which is more about impairment loss hedging, and yeah, allowing more tools for LPs to hedge risks for LPing, and one-sided deposits, for example, that kind of things.
Makes a lot of sense. Now that you guys have now that you guys are post-launch here of the app, I mean, OMFG has been requested on MCG for so long, and I think one of the things I see the community keep asking is, hey, like, can we hear more from the team? Can we get an idea of what's going on in the back end? Like, how can we get comms, at a high
Yeah,
level? Have you guys been thinking about that, or maybe to address some of those people?
yeah. Actually, I think we did not a great job at communication lately, and to be honest, like we just maxed all of our energy into launching, and I just want to say more about this, guys. Is like, I mean, launching a liquid token without having a product is not easy. You can run into like being a vaporwave very quickly. You can be distracted very quickly, right? You have a lot of people like screaming over your head every day about stuff that they care about, like for this specific day. And if if you get too much into it, and we have seen this happen to a lot of IC like project that did an ICO before having a product live yet. They just like kept delaying the product, and once you delay it, the expectations becomes more now. So you need to justify your delays. So you work for like the grandiose reveal, and you keep pushing it more and more. So at some point, I just like, to be honest, I just did you challenge until I launch. I just didn't write anything, and I just like said like, I will launch and then we get back communication. I know it's not the best. It's actually affected us in some negative ways, but yeah, now that we launched, we'll get back to the usual, which is basically having more comms going on, and being more transparent about how we are work. And we are shifting from this waterfall way, which was pre-launch, to more like agile, like weekly basis kind of work approach. So we can have announcements, we can have user-facing shipping each week, and basically communicating more about it. I'm gonna actually drop like an article probably tomorrow about like our first monthly update.
Love
It's
it.
the same, yeah, the same way like Profit and Ram do it. I actually love it so much, and it's gonna be a good start to get this back.
Ram has done a really good job. I mean, both Profit and Ram. Profit, I think, has been one of the most transparent founders. I've loved watching him. When it comes to like no ego, Profit is so open in like, hey, this is what we're doing wrong, this is what we're doing right, this is what we're
Yeah,
trying to solve, and like this is our achievement, and it's been incredible to watch. And same with Ram, he's just been very transparent in terms of everything, and I love seeing his stuff. So I'm glad that you're kind of leaning in that direction.
thanks. Yeah.
Maybe we close off here with a bit of runway. You guys obviously have raised money now. Now the goal is to make this thing profitable and get it cooking. What kind of runway do you guys have at the moment, and how are you feeling?
We don't have much. We have like 11 months of runway. I'm a bit paranoid about runways. It's not that bad, but I mean, given the market we're entering, I believe maybe, like, yeah, I don't want to be like a pessimistic, but yeah, we just have enough runway. I'm not sure if you're gonna be able to break even before that, to be honest, but that's actually what we are betting on. I'm not sure if you're gonna raise maybe in the future down the road, but yeah, we have almost 1 year, and I think, yeah, as you said, we did the 0 to 1 leap, and now it's more about like the 1 to scale, right? So now it becomes like a numbers game for us, which is very interesting.
Yeah,
And I think, yeah, and sorry guys, you mentioned actually that we were actually we were the second project that came out from MetaDAO. First it was MTN Capital, but I think they got their treasury liquidated. So actually we were I think the first native like MetaDAO project, because like we were, I think, yeah, we and Umbra are the ones who created a raise. We didn't had like any product yet, and we are actually post launching. So it's great to see.
Yeah, I mean, you've come a long way, and I think 1 year is a lot of time. A lot can happen in a year. The only thing is like it's so difficult in this market. And I think at this point, a lot of projects kind of at the mercy of the market. You know, how long can you sustain and last until the market comes back? And sometimes even great products just fall victim to a poor market.
Yeah.
All right, like, is there anything you guys are doing specifically to market proof?
Yeah, actually, that's the real concern I'm thinking about as a founder. I don't want to be under the mercy of the bear market. So I think in the coming months, like maybe 3 months, maybe second quarter, we will understand where it's heading. We are very optimistic about like our numbers and how we're gonna attract numbers and how we're gonna perform. But yeah, I mean, around that time, it will be more apparent to us, and maybe at that time we will think about how we can cope with it. But I think, yeah, I think that's actually, we are getting closer to this risk, and I think that's a very real risk for us, and that we are thinking like about constantly.
It's an interesting perspective because you want to build for the future, but you also want to make sure you build for the time being so you can sustain
Yeah,
until that future gets there. I
yeah,
guess, which is maybe why like I thought about prediction markets too, because I know it's just so hot right now that
yeah.
maybe that's like a good short term thing until markets just give you the market that you know.
Yeah, yeah, that's actually very true. I think we should actually prioritize, low hanging fruit that we can, like stuff that we can do right away and gain the more impact, the most impact out of it. So I think actually this is very good, and I think we will think about this more in the coming days. So yeah, yeah, it's true. But I think we're gonna do
Well,
it.
I love your reflection and your ability to do that. I think it's so important. And of course, you know, it's not a doomer mentality. It's more of a like, hey, we want to just make sure we're prepared for whatever happens, and you have to do that as a founder. So I can appreciate that. Um, with that being
Yeah.
said, I think we covered a lot, Raka. If you've got anything else you want to, make sure you cover, or like a specific message to deliver to everyone, now's your chance.
Um, no, I think I think that's it, and I just would like to thank you for hosting me and having me. I enjoyed it so much, and
Good.
yeah, it's my pleasure to be here. So I think that's it. Just like if you guys got any idea, like any questions or something, just head to our Discord. We will help. And if you found any issue or vulnerability, just send it to us at security at
We're
OMNIPAIR.
not super coders by any stretch, but I will say just consistently post as many updates as you can on like TVL metrics, how much LPs or lenders have earned and whatnot, and yeah, I
Yeah.
think that's probably the path to success is just getting as
Yeah.
much TVL in there as possible.
Yeah, yeah, exactly. And actually, right now we are just like in the phase of building out those metrics. So we are building dashboards and stuff like this to be able to
Perfect.
track,
Yeah.
yeah, to track every bit of it. And yeah, we started to see some, and we would basically, yeah, it will be just a numbers game, to be
Yeah.
honest, just maximizing the numbers.
In this market, that's what people look for. It's definitives. What's hard, what's provably there, verifiably there, and there's not a lot of nuanced numbers. They tell a lot of the story. They don't always tell the whole story, but they tell a lot of it. So I think that's good
Yeah.
feedback, Josh.
Maybe, we didn't ask this, but do you have like a number, either TVL or volume, which you have to get to break even? Is there a number in your mind?
To break even, I think I have calculated before. Um, let me do the math real quick.
Like, is it 50 million in TVL, 500 million, 5
Um,
billion,
no, I think it's 40 million. It's
40
40
million?
million. Yeah,
Oh,
which is
that's
not a lot.
achievable.
It's doable.
Yeah,
That's
yeah, it's actually not
achievable.
a lot. And I mean, the burn itself can go lower. I mean, this is bad to say, but I think like as a founder, just like think about any case. And I
Yeah.
mean, yeah, we will get there. And to be honest, like Radium right now, they got 1 billion TVL, right? And I mean, yeah, for us, I think it's very, very doable to
Cool.
break
Yeah,
even. Yeah.
yeah. I think like a big part of that is, having the tokens that are hot right now listed as soon as possible. I mean, we even saw like
Yeah.
Bags a couple weeks ago did 1 billion in like a week, right? So like there's volume and appetite out there. I think it's just going to take someone that's very on top of the market to always have those tokens, on the platform, and then like people just knowing that they're there to even trade. It's got to be like spoon fed, kind of on a silver platter.
Yeah.
There's definitely volume out there. Yeah, it's an achievable goal, I think.
Yeah, I think even what makes it better is like now not just being able to trade it, but also leverage or short it, so long it, which
Yeah.
is actually great, right? So yeah, I think I'm very interesting. I'm very interested in what we will do next. But yeah.
Yeah, even
Awesome.
like traditional markets, and I'm sorry to keep you stringing you on here, but like we have Oro, good friends with Oro on the show. We saw they partnered with Solomon Labs not too long ago, but like even traditional markets like that, I would love to be able to loop and borrow against gold and silver. And
Yeah.
of course, you said anything's possible. But like finding those traditional assets that people are like willing to just hold on for a long time, and then allowing them to loop and access some of these DeFi mechanisms that they can't do other places
That's
is
actually a good
awesome.
relationship. Have you talked to Oro yet?
No, but we actually have Borgbet as a launch partner, and they are seeding some pools on OmniPair. One of which is like I think we announced it already. It's a VNX, so it's called. I think RW is one of like the most the best use cases in OmniPair to be able to loop it. So yeah, but yeah, we didn't reach out to them yet, but probably we'll do. I mean, we got Evan on the team. By the way, we are now a team of 6. I started this as solo dev, but now we are a
Wow.
team of 6. And yeah, they're pretty talented. And yeah, Evan is responsible for our growth, and he is knocking doors basically like every day, trying
Good.
to get us in touch with every protocol. And yeah, we expect it to happen.
The
Well, you
RWAs
chose,
feel like a win-win.
yeah, and also you chose the right launch pad. I mean, like you were in there before Umbra had those headline numbers, before Vici ran to $100 million. Like you kind of picked a winner before anyone knew it was a winner. So congrats to that.
Thank you so much. Yeah, I guess we like I remember was like sitting around with like Conan and Prophet, and just like thinking about like this is gonna be the best, and this is gonna be the first time we it's like OmniPair itself is an experiment, but also it's being raised on an experimental platform, right? So it's like a lot of bidding in there, but yeah, I mean actually it's going so far, it's going so well so far. So yeah, it's good to
Sweet.
see.
All right, no more taking your time,
Yeah,
Rock.
no
We'll let you
worries.
go, brother.
See ya.
Thank you so much, guys.
Thanks.
Have a good one.
Peace. All right. Very
We
cool.
did it. We got OmniPair on. Yes, let's go.
Very requested.
Oh.
Very